Hi, guys. Welcome to the Tuesday edition of the podcast. Thank you for joining me. And before we get going here, I just want to thank you for all the comments on the blog article about my conversation with Warren Buffett. It's amazing. I've never showed that picture before in all these years for whatever reason. But it's amazing that every time Warren Buffett is mentioned in an article or a podcast, it gets a lot of feedback. And typically it's very positive. But I just wanted to share on that annual investor day for Berkshire Hathaway with their annual shareholder meeting. Got me thinking about that picture that hangs on my office wall, and just wanted to share that with you. So thanks for the comments on that, because a lot of you were very interested in that the article and the picture. So thank you. Well, the stock market continues to do what it's been doing, which is for people that are short the market, they're getting, I'm sure, extremely frustrated and losing a lot of money at the same time. And what's interesting about this is that every time it appears that it's getting tired, and of course markets don't get tired, investors do, but as investors seem to be getting tired and losing some enthusiasm, the market snaps back with a new, fresh high. And that's what it did today. The Dow Jones, of course, crossed over 15,000 to 15,056. Russell 2000 was up 967 to 967, not up 967. That would have been quite a day. It would have been about 100% gain on the day. S&P up 1625. Of course, it's been over the 1600 mark. So you got all these round numbers. The next round number for the NASDAQ would be 3400, which I think it did go over earlier in the day. In mid-cap index, the small cap 400 S&P mid-cap index is 1181. NASDAQ was the weakest today. It was pretty much flat on the day, only up about 4 points. But the small caps, mid caps were up 0.8%. So a very strong day for those. And of course, interest rates ticked up a little bit. Volatility ticked up just a little bit. And but overall, really nothing has changed. And I took profits on a few things around the first of the month, and that really lasted one day as far as the sell in May and go away. And of course, if you haven't seen the previous podcasts, I've been talking about the fact that don't use that as a gauge to determine whether you're going to buy or sell stocks based on the calendar, because when you do that, this will be the 1 year it doesn't follow the pattern. So sell in May and go away lasted for May 1st, basically. But look, the stock market is getting overbought in the short term. And what that means is you could have a one-day correction or a 2-week correction or something like that. But I am still thinking that you will get better entry points for stocks. And the whole thing about this is you always have to determine, well, if you're sitting there waiting for, let's say you've cashed out of the market for 2 months ago. And I know people that are doing this in their 401ks where they're cashing out all of their mutual funds in their 401ks. They're basically taking it all because they see these round numbers like 15,000 or 14,000 on the Dow, and they immediately believe that it has to go down. And so they're telling me that they're shifting all of their money out of their 401k into the money market, all of it. And I think anytime you do this all or none, you have that all or none mentality, you're probably going to lose money at some point. And so for those people that are sitting completely out deciding when should I get back in, yes, we may have that correction, but let's say you were thinking we were going to have the correction, and right here you started going to cash. We did have a correction, right? But it came back just to where you sold, and it went up, so you really didn't benefit anything by being out. So again, if you're out right now, you must be expecting a correction down to here, or down to here, or down to here, or here, wherever. The point is that the corrections may take place at a point much higher than we currently are right now. And that's really what the stock market has been doing, is having very small 3 or 4 day corrections and then up 3 or 4 day corrections, maybe a little sideways mixed in for fun, up, pulled back 3 or 4 days, up. This was a little 1 day correction, and now we've gone up, and this is the 4th day in a row of an advance. Now, volume's been a little lower. There's a few things you could complain about the market, but overall, I think it's an equal. If you looked at the ledger of positives and negatives, there's some negatives setting up, but we also have a lot of stocks participating in this rally, and that's very healthy. I mean, if you look at things like let's take a look at the transports, which have broken out once again. And I've drawn this little wedge pattern where they were kind of, remember they had this big move starting late last year, and obviously at the beginning of the first of the year after the fiscal cliff was resolved, I guess you could say. Transports really ran up. Then they started weakening a little bit, and everybody thought this was it was over, and we had a big down day on April 15th on tax day. High volume. Looked like this was just about to roll over, and it held in there, and now it broke out the last 3 days. And so, you look at that, you look at financials and banking and oil and equipment companies and retailers doing well, even materials doing well today, industrials doing well. So again, it's not necessarily a market that is thinning out. For a while, we were talking about things like utilities leading the way. And in the last few days, they've been a laggard. Now, they did very well today. They actually outperformed the stock market quite a bit today, up about 1%, but they had been rolling over. And I'm still long utilities. And again, until proven otherwise, I will hang on to these. And right now, they still are a nice low volatility area that's performing very well. We did have some heavy volume in the last couple of days, so they could be starting to peak, and that's fine, but I'm not going to sell on just the first couple of down days with it. A couple of things one thing I did sell out a few days ago was healthcare. I felt like this was something that was very extended, and the volatility started to pick up, and other things just looked more attractive to me. And so what's happening now is you've seen it start to move sideways. You can see that the range is getting very tight. And so I think we're going to obviously break out one way or the other pretty quickly, and it could be to the downside. We'll see. I'd say it's a 50-50 coin toss, and when it gets to that point, we have a 50-50 coin toss. I choose to err on the side of caution. Now, we also did talk about the Russell 2000 in the last podcast, and I had talked about that I had taken profits in this as well because it was moving sideways for really over a month, and was making kind of these lower highs, and I really was concerned about it. Had a good day on the 2nd of May, the second trading day of this month, and then had a nice gap up and had a really strong day. Now it's back up at new highs, kind of breaking out to the upside. So that's something we need to see. Does that continue or not? Because really we want the Russell, we want the semiconductors, we want the kind of the NASDAQ, these higher volatility, higher beta areas to be outperforming the general stock market, because that's generally a healthy market. And for a while, they weren't. We had things like consumer staples leading the way, and utilities and healthcare. Now you may see a little shift where, you're seeing the Russell start to do well again the last 3 days. You're starting to see utilities and healthcare start to lag just a little bit. So I think that is something to watch. Again, will it continue? This could be, one of these, as I call them, the fake out breakouts, where it looks like we're going to head and blast off up. And maybe this is the point where there's a kind of a blow off top where everybody jumps in and it goes up just a little bit and then it comes back into this range. We'll see. It's too early to tell, but I will say over the last few days I've ratcheted things back a little bit, and so far that hasn't been a winning move because the market has gone a little higher. And it's not to say I'm 50-60% cash or anything crazy like that. It's just to say that I've ratcheted back some things that took some profits on some things, and it may have been premature so far, but it's still early going, and again, the market can move very quickly based on anything. And right now, it seems like everybody's kind of throwing money at this market, and it may continue. And that may be the biggest risk to the bears, is that the market just continues to run away from them and doesn't ever give you that chance to go in. And that's what the strong market has done. So we need to be aware of that, and you need to also prepare for potentially a market that just keeps drifting higher. Now, finally did take profits on Microsoft today, and this was a one that I had owned for a while, and it's funny because of all the stocks that I've owned and ETFs and things like that, I had a lot of comments on Microsoft. Boy, this stock hasn't ever done anything. Apple's eating their lunch, and there's plenty of other good companies out there. Why Microsoft? And I commented on the fact that companies like Microsoft, they ebb and flow between cheap and expensive. And Microsoft was on the cheap end. And it was to say that the company itself, certainly the stock may run up if the CEO was ousted out of there. It would probably run up if it was broken up into little pieces. But and there's a lot of things that they have done wrong. They've been late to a lot of things. However, unlike somebody like Dell, who has been late and not doing anything about it, Microsoft was late and is doing something about it. And for whatever reason, the stock market is now starting to reward them. And so this was a stock that was cheap based on several metrics that I look at. And it got to a point where I think it's fully valued. And also, if you kind of zoom out a little bit here, and there's a lot of lines, it had broken this downtrend line, which I'll get rid of that for you. But it's at this point now where kind of this old high. And I think even if we switch this to a weekly picture, you will see going back, this is a spot that several times it has kind of peaked at. Now, it could make a run, which this old high back up here is around, let's call it $37.50 or so. Could it run a little bit more? Yeah, it could run another 10% or so. But I think what's more likely to happen, and you already saw it, I sold it this morning pretty close to the open. It kind of went down most of the day. I would expect it to pull back a little bit and give me a better entry point. Maybe even, if I get lucky, maybe even $30. If it pulled back 7.5 to 10%, you'd probably see me back in there again, because I don't think the metrics are going to change. I just think the stock price is going to change. And that's what we're looking for. We're looking to buy things on sale and sell them at full retail. And I think I bought Microsoft wholesale and we sold it retail. So that was another one we locked in gains today on. So it's just, it's something that I think, again, I'm ratcheting down the risk as the market's going up. And the market may continue to go up, but I would rather be buying on a dip in the market rather than chasing, as some of these things are starting to get going kind of vertical. Let's take a look at gold real quick. Get questions on gold all the time. And gold, of course, it broke down, and I've drawn a couple of lines here. And really what we saw this gap down. Gold had a nice run back up to it, and it stalled at, so basically what they call fill this gap between this price and down here, it filled that, and now it's having trouble. I thought potentially it could get back up to the old breakout level and roll over, and that would be a place to short it. But so far, it never got back up there. And John Paulson, the big hedge fund manager, who had tremendous success the last couple of years, is not doing so hot because he owns huge chunks of GLD, may own physical gold as well, may own gold mining stocks as well. And I think so far this year he's down something like 25% on the year. So having a tough time this year with gold. And, you know, again, if you're trading gold, there's nothing really here to see. I think if it were to come back and test this low and bounce, that may be a trade from the long side, but the upward momentum seems to be over for now. Oil, and this isn't updated through today, but oil had broken down. We talked about that in prior podcasts, recovered back through, and now it's at this old high here as far as the downtrend. So let's watch what oil does here. But again, overall, it's kind of interesting to be watching this, what looks like it may be a deflationary situation unfold. When you look at in the past year, all the different commodities that have gone down, really the only thing that's done very well is natural gas. But when you look at oil and corn and all these different commodities, they have all fallen. And so the consumer, I'm not going to say it's been in better shape because I don't know if that's necessarily true, but things could have been worse had prices been going up during this time. And you're seeing things like retailers, home builders, restaurant stocks still do well. And so people are still going out to eat. Now they're probably doing it on their plastic, but they are going out and spending money because that's what Americans seem to do. So I'm going to wrap it up. I basically just want to tell you a couple. I've got an update on something I'll get to in just a minute, but I did want to let you know, as far as the overall market today, we're at a point right now where I think if you're really wanting to buy some things, I would, unless they're very specific things, I would tend to wait. If you're properly positioned, if you're, again, somebody that's very heavily not invested or invested in way too much and sitting on the sidelines in cash, then of course you may want to average in. But if you're somebody that just wants to buy a little bit more, the market's getting very overbought here in the short term, so I'd wait for some type of pullback. I did want to also announce we're going to do some things on the blog here coming up in the next few days, possibly few weeks, and we're going to be doing some as much as we can, regularly scheduled articles and updates. And what they will be is kind of a week in review and perhaps looking out to the next week. And they may come out on the weekend, and they'll be posted, and they'll have a lot of good meat and information on there as far as some of the strongest sectors we're seeing, maybe some of the weakest sectors if you're somebody that likes to short or wants to be avoiding certain areas. We're going to be looking at maybe earnings going back and forward, maybe some economic events. So we're still kind of putting those puzzle pieces together on what that might look like. But I think you'll find it informative and something that you can look forward to every week, and something that's a little more on a regular schedule than of course, how we do it now on some of the podcasts and articles. Because we basically do them when we think there's something that needs to be said, or more importantly, sometimes when we have time to do them. But overall, some of these things we'll be able to put out there on a regular basis, and we think it'll be pretty informative to kind of give you an overall look of what we're looking at and an overall look of the market and kind of what sectors and things are strong and why certain stocks moved the way they did. So hope you like that. And if there's some other things you'd like to see on the articles and mentioned in the podcast, do not hesitate to email us back. Let us know what you're looking for. And don't forget Google+. We did update our YouTube channel. If you just want to subscribe to the YouTube channel, you can do that. KarlEggers.com. We want you to subscribe there, because if we don't do a podcast and just have an article, you'll still get them. Whereas if you subscribe to a YouTube channel, obviously you're only getting what's posted on there, which are the video podcasts. We're on Facebook. We're on LinkedIn. We're on EggersCapital.com, iTunes. So we're all over the place. Anyways, thank you very much and have a wonderful evening.